Hi, everyone. Welcome to the Capital Raiser Show powered by the Family Office Club. Today we have Jeremy Dyer, founder of Starting Point Capital. Welcome to the show, Jeremy. For sure. Yes, you have a long track record in sales. Now you're in multifamily investing, very successful. Give us the backstory of how you got to this position.
so successful in terms of the education side that many in my personal and professional network were deciding, hey, we want to invest into that opportunity with you, Jeremy. Okay, great. I'll introduce you to the sponsor, and the sponsor will have a direct relationship with you, and you can decide whether or not to move forward or not. Well, what was happening during that time, Weston, is I was actually referring my network to sponsors for free, right? In exchange, by the way, for some continued education and some mentorship from those sponsors. And so it was really just 2 years ago, Weston, that I decided to start my capital raising business, which is called Starting Point Capital. The goal of Starting Point Capital was to continue to educate, but it was also to bring together my network, my community of other like-minded individuals that wanted to diversify outside of Wall Street and into Main Street so that we could use that community of investors as leverage with the sponsor, okay? Leverage with the sponsor to get a better return split to our fund. That's how we raise capital. We raise capital through the fund of funds mechanism, or the SPV, because we feel as though it is the most compliant, okay? Some might argue for or against that, but we feel as though it's the most compliant from an SEC perspective. So fast forward from the time that Starting Point Capital was launched back just 2 years ago now, we've been blessed to have been able to place now over $38 million with a few different sponsors that we've chosen to partner with.
Congrats. Yeah, so we're called the Capital Raiser Show. We have a lot of operators on. We have capital raisers like yourself. So you have a background in sales and prospecting, and all that goes hand in hand. Give us some tips on raising capital, how you went about raising $38 million.
Yeah,
and this is only in the past couple of years.
Yeah, I appreciate that, Weston. Thank you. And it really comes down to transferable skills, okay? It's not that everybody has the same skill set, okay? It's skills that people can certainly learn by doing, okay? And that's one of the things that's maybe unique about myself and others that have had success in this business is sometimes we don't get out of our own way. Sometimes we get too stuck on doing things the right way and not wanting to avoid doing things the wrong way. The truth is that I fail forward every single day, okay? Every single day I make mistakes, but I learn from those mistakes. I learn from those failures, and I continue to grind and continue to, hone my craft, so to speak, right? And it's really the transferable skills that I've been able to develop in the corporate space, having a high income, high activity sales job over the course of the last 2 decades. And the skills that I've learned there, I've been now able to apply in the capital raising space. And at the end of the day, it's not that complicated, okay? If you think of it from a human level, right? People want to genuinely be provided value, okay? And we can provide value, through education. They also want to have a certain, degree of a relationship with another person. It's very difficult, I think, to raise capital in this space by flooding somebody's email inbox, with a dozen emails in the next dozen days to try to nurture them. That's not a relationship, right? People want to have a relationship with someone, and that's really where, the sales side comes down to it. And it's not even that you have to be good in sales. You just have to know that this business is a grind. And if you're looking for somebody to place $50,000 or $100,000 of their hard-earned capital with you, it needs to be more than just an email being delivered to their inbox every other day.
How did the first couple conversations go with possible investors?
Yeah, I would say that when I first got started in this business, I did it the wrong way. And that was I just picked up the phone and called the top 25 people that were closest to me to tell them what I was up to. I would say that I was, very much a novice at that point. I barely understood what an IRR was and an equity multiple. And so it was really some tough conversations with people that I know would give me some grace, having been in the business for a short period of time. But what gave me comfort and them comfort is that I was at that point a limited partner investor in 24 deals. Okay. I had previously had deals that had gone, full cycle, right? And so those conversations initially were a little bit sketchy, I would say, in terms of, not being well polished. And certainly I lacked the confidence, right? Because I can't control what questions or curveballs that potential investors going to throw at me, right? But having had enough of those conversations over and over and over, that's when I was able to slowly build up the confidence to be able to, know that I can answer the tough questions now. And if I'm not able to answer the tough questions now from those potential investors, at least I know where to get and find the answers to their questions. But I think it's important for all capital raisers to understand, and that is from a psychological perspective, you can't chase after capital. When you start chasing capital, it has a tendency to want to run away, okay? Instead, there are decisions that you can make in terms of your process and processes where you really become a capital raising magnet, where now all of a sudden you're not chasing investors. In fact, they're reaching out to you because they genuinely want to know what you're up to. And that gives you the opportunity to explain the benefits of passive real estate investing.
Got it. So let's talk about how you can be that magnet, how you can attract capital to your deals. Is it social media? Is it proactive outreach? What exactly is that?
Yeah, great question. I would say number one is social media. I am a big fan of LinkedIn. That is absolutely the sandbox, so to speak. It's just most people that are higher net worth, tend to be on LinkedIn. Certainly not all of them are. I have not found any success to date on any other platforms, whether it be Meta, Facebook, or, Twitter or TikTok, for example. But I really like LinkedIn. The types of posts that I put out there are meant to really appeal to people's emotions. Okay, I'm always trying to tell a story with the types of content that I'll put out there, and I want to emphasize the human element of it as much as I can. So, I regularly have people in my professional network that will joke with me, Jeremy, we're so tired of seeing pictures of your face, every Monday morning when you post at 6:30, or they really appreciate, seeing pictures of my children, for example, or my wife and I, out on a date night on a Friday night, right? I'm really trying to appeal to investors' emotions, to come across as a real human being, right? Somebody that they would genuinely want to reach out to, right? I think some people in the social media space, their content and any other videos or imagery that goes with that content makes them come across as though they're untouchable, right? Well, I don't ever want somebody to feel like they can't pick up the phone and have a conversation with me or reach out to me to schedule a time on my calendar.
So do you find that people reach out to you through your posts, or do you also do proactive outreach?
Yeah, great question, Weston. I do no proactive outreach. I know that probably sounds odd for me to tell you this, having been the self-proclaimed rookie of the year in the capital raising space. I just don't. Sometimes I'll tell potential capital raisers, I started raising capital 2.5 decades ago. And they say, what do you mean by that? 2.5 decades ago? It all comes down to your own personal brand and your own reputation with your network, okay? There are a lot of investors that choose to invest through Starting Point Capital that I have known for 2 decades. They don't even look at the investor presentation, and they certainly don't read the subscription documents, okay? They're literally deploying hundreds of thousands of dollars into our opportunities because it's me, okay? So the takeaway there is for folks that don't have a 2-decade-long track record, what do, right? Well, my advice for you is to become a daily better version of yourself, okay? Continue to be educated, continue to nurture relationships with people, continue to upgrade your professional network, continue to put yourself out there, right? whether that be through social media, texting people one-on-one, right? Scheduling the lunches, scheduling the coffee, appointments. Like, continue to expand, your network, because what's going to end up happening is if you do that today, okay, it's going to help you raise capital on not your next deal, okay? It's going to help you raise capital on your deal in 6 months or a year from now, okay? I don't ever give potential net new investors an opportunity to invest in our next deal, okay? In fact, I tell them not to, right? Instead, I want them to further their education. They can certainly use our next opportunity as a way to do that, right? But why do I not want them to invest in our next opportunity? Is because I don't want them to feel like they're being chased. I also want to use that time to continue to build into them, to educate them, to see if they have questions, or encourage them to read a book or listen to a podcast, right? I don't want investors to invest with us based on emotions, okay? I first want them to be in a position where I've now been educated enough. I now know Jeremy on a more intimate level. I trust Jeremy. And those are the types of investors that we're largely looking to partner with.
Awesome. So yeah, let's talk about the deals for a minute. You partner with operators first, and then you look at the deals second. So talk about what you look for in an investment opportunity.
Yeah, when it comes to it all comes down to the operator, right? The sponsor is number one, the asset class is number two, the financials is really number three, and number four is the exit. What I just said there was an acronym that stands for SAFE, S-A-F-E, okay? Sponsor, asset, the financials, and the exit, right? Beginning with the end in mind. So when it comes to, partnering with operators, I have a certain criteria that I personally use. And that is I have to date the sponsor for a minimum of 2 years, okay? During that time, I have to have invested my own personal capital with that sponsor at least twice, okay? We can talk about how you have to know, like, and trust the sponsor. That all sounds great in principle, okay? It also might be that sponsor has an amazing pitch or presentation deck, right? And they can articulate the benefits of the deal effectively. But really, the only way to truly vet a sponsor is if you are actually in that dating relationship with them for a couple of years, and that you have also deployed your own hard-earned money into their opportunities before you ever give investors the opportunity to partner with you on their future opportunity.
Got it. So when you're investing your own money, you're a limited partner. What do you look for besides returns? I mean, obviously the returns are great, and the economy might just make everyone's returns look good. So what do you look for specifically when it seems like everyone's making money?
Yeah, well, what happened the time period that you're describing there happened to a lot of sponsors, right? That were exiting, out of deals back in 2021 and early 2022, when you would buy, potentially a value add, opportunity and almost not have to provide any value to the opportunity because sponsors looked good just based upon one thing, and that is what we call natural or organic appreciation, right? So there were some sponsors in the past that have been able to, virtually provide no value to a property and still give their investors a great return upon exit. That time period ended when interest rates skyrocketed beginning in the back half of 2022. So now it really comes down to, what is the sponsor doing in response to those historic rise in interest rates? Are they a sponsor that has the ability to turn on a switch overnight to pivot in their strategy? Are they surrounded with the right people on their team in order to be able to do that? There are a number of sponsors out there right now that have either already closed up shop or they will be closing up shop fairly shortly. There's also other sponsors in the space that are incredibly distracted right now, Weston. Okay. What I mean by that is they have deals that are on life support. Okay. Maybe they've suspended, their asset management fee. Maybe they've obviously suspended distributions. Maybe they performed a capital call on those deals. If those types of sponsors out there that have a track record that is a little bit subpar, okay, according to what my typical buy box would look like, I'd be very afraid to invest with a sponsor that has such a track record, because I'm concerned that maybe they're distracted on some deals that are on life support, or perhaps maybe they're just simply looking to do a deal in order to be able to keep the lights on.
Got it. So do you only do multifamily investing, or are you seeing other opportunities?
Yeah, I personally invest in other asset classes outside of multifamily, namely assisted living, self-storage, flex office, retail, just to name a few.
Awesome. Do you plan on raising money for those, or just multifamily?
For right now, our focus is on multifamily. We still have a lot of net new investors that come into our opportunities. And my recommendation is for investors that have never invested in a private placement real estate syndication. My advice for them is to really start in the multifamily space, to really cut their teeth. I think it's one of the more resilient asset classes. Not to say that there aren't other opportunities in the space where maybe you can achieve a greater IRR return projection. But at least in terms of getting started, I highly recommend multifamily, which is also why I had our business name is Starting Point Capital, right? There's a reason for that, because we're giving investors kind of their starting point to get involved in the passive real estate investing space.
For sure. Yeah. So what are your plans for the future?
Yeah, great question. My focus right now is to continue to engage with our investor base, not just looking for net new investors, but making sure that we're laser focused on, providing value, to our existing investors by asking them questions, continuing to, get to know more about them, their goals, their family. We also, within the last, 6 to 12 months, the majority of our net new investors are not investors that found us through any social media efforts, but they're referrals from our existing investors. So we've now achieved roughly 300. We've gotten to the point where we have over 300 investors now that have invested in at least one or more of our opportunities. And I could see our business continuing to scale up and grow up over the course of the next couple of years, just simply based upon the amount of investor referrals that we're receiving now.
Got it. When you say scale up and grow up, do you mean you're moving to the GP side, or just staying on the passive side, partnering with operators and being the capital source?
My plan is to continue to remain on the capital raising side of the business. As your listening audience knows, syndications are largely a three-legged stool. There are people that are good at the underwriting. That's not me. There are people that are good at the asset management side of the business. That's not me. And then there are people that certainly tend to thrive in the space of raising private money from investors, and that's a space that I really, really have a passion for, engaging directly with LP investors.
Absolutely. Well, Jeremy, thank you so much for coming on the show. Shout out to our sponsors, the Family Office Club, Invest Next, and Capitalist Pro. Jeremy, how can people reach you?
Yeah, thanks for asking. You can find me at startingpointcapital.com. Again, that's startingpointcapital.com. I am very engaged on LinkedIn. You can find me there under Jeremy Dyer. And within the next 30 to 60 days, you'll also see me launching a book that I'm involved with publishing. The name of that book is called Fundamental. So we'll be certainly priming the pump for that out on social, as well as those that are on my email distribution list. So if you'd like to learn more about the book launch and the published book of Fundamental, please do reach out.
Awesome. Thank you, Jeremy.
Thanks for having me.